Ladies and gentlemen, gentlemen and ladies and gents, we're going to have an outstandingly good time. We're going to be playing Outstanding in the background. I hope y'all can handle it, because if y'all can't, I can. You know what I'm saying? All right, Vern. We're going to go back to our home screen, and then we're going to get to a blank screen so that we can have this conversation, okay? Oh, that's right. We ain't got no blank screen on this one. Ladies and gentlemen, it is 4:08 in the a.m. I took Alterel 2 days ago. I told you Alterel is like a narcotic. It puts me back on my sleep schedule. The lack of sleep, the worry, the stress about all of you and your situation. Whoo, doggy, let me tell you something. That right there is more than enough. Look, I had a conversation with someone. And perhaps you guys will remember it was the person who was a Jehovah's Witness. I read you what they wrote and how they got the tax thing. Well, they went to talk to a CPA. Then they went to talk to another CPA because they wanted them to tell them, hey, am I doing anything wrong? I want to share with you what the CPAs told them. Okay, and what my response was to the young man regarding what the CPA said. Give me a second. If y'all don't mind, we ain't going to go to Gmail. No, we forget Gmail. We're going to go Word. Word up, y'all. Word up. And then we're going to go here. This is the conversation. The conversation says, good evening. Well, the information I gave them, and by them, I mean the accountants, we're going to go to this mode so that I can move around, as well as the tax attorney. See, he spoke to two different people, tax attorney and the accountants that was present. I explained what I was trying to do by forgiving and writing off debt. They said, pay attention, you can't write off a debt if you didn't lend out any actual money, even in arbitration or injury cases. Ladies and gentlemen, that is not true. But hold on now. You cannot carry forward or carry back or receive a refund for money you never paid taxes on or never collected. And hold on now, if you did win an arbitration or a judgment, which in turn became a bad debt and somehow figured out a way, pay attention, somehow figured out a way to receive credit, you can't transfer any carry forward or carry back and or certain tax credits. Uh-oh. Oh, snap. Wait, hold on. Let's make sure. Outstanding. Oh. Okay. We're going to let that play. Long John Silver? I don't know who that is. Anyway, let's go on, okay? It says, you can't transfer or carry forward or carry back and or certain tax credits. They just kept replying, you can't, it can't be done. And after the meeting with them, he called a different tax attorney and told them the same thing. He says, I'm in a complete loss now. However, I think I will go down to the city hall and speak to somebody in fiscal services and see if I might really get some different answers from these accountants on CPA or CPAs. This is what I wrote back. No, the IRS tax topic says you definitely can write off a bad debt. The same as banks write off a bad debt. It specifically says, and you guys got to give me a second. It's dark and I'm reading without my glasses, and that's becoming a little difficult. So I was putting on my spectacles, and let's see if this is a whole lot better. Now it says, no, the IRS tax topic 453 definitely says you can write off a bad debt. The same as banks write off bad debts. It specifically says that you loan out money. If you loan out money, pay attention. If you loan out money, okay, well, a judgment is a collectible, okay? That's all you need to know. A judgment is collectible. And when they don't pay, it's as if you've loaned them the money that they haven't paid you yet. That happens every single day, done in every single court judgment. So, no, you don't have to actually lend out any funds, ducats, or anything else to someone somewhere. He says, because remember, the banks don't lend cash, they loan credit. And yes, if you write it off, it becomes an automatic tax credit after 6 months because you forgave it, because it is a refundable credit and a 1099-C is done. Ladies and gentlemen, when you do a 1099-C, you're forgiving a debt. The taxes that need to be paid, which they're talking about, is the 1099-C B section of the form. That's the taxes. That's the withholdings that these idiots are referring to when they say you have to pay the taxes. The taxes are paid by the 1099-C B. But let's continue. The taxes are paid via the 1099-C B section of the form because the other party is responsible for the debt before the taxes. For the taxes. Look, I can't make them understand. Again, you tried, which is why we are starting a company that will do exactly that. We will talk soon. Now, what I did is wrote this secondary. What do you a favor? I think it says, what I'll do you a favor. I have you think about it this way, and then let me know what they don't know. What I let you know is they don't know enough about the law or enough about taxes to be helping you. Ladies and gentlemen, the reason why they don't know enough about the law, because what they don't understand, that if you receive a court judgment and the other person doesn't pay, that you get to put a lien on their stuff, that you get to garnish their wages. They still owe you money. It is still a bad debt. The IRS is talking about bad debt. They're not talking about bad loans. Pay attention. They're not talking about bad debt loans. If it was a bad debt loan or a bad debt as a result of a loan, they would specify that you can only receive tax credits regarding a bad debt as a result of a loan. Go back and look at the tax topic. The subject is bad debt. It says if you loan money, but pay attention. It says if someone owes you money. So those are two different things. Now let's go on. By the way, an arbitration award is a judgment. That is money owed. That is money someone owes you. It is not, it's a judgment. They owe you that money. Because they owe you that money, you get to forgive that debt. Now, we're talking about debt forgiveness. Wait a minute. Are you telling me that they're just focusing on the bad debt and they're not focusing on the fact that somebody owes you money and you forgave it? That's right. They're not putting the two together. They're not putting together a bad debt and a debt somebody owes you, and you are writing that debt off. See, that's why it's called a carry forward bad debt, because you're writing it off. It's not a deduction. You're writing off a debt someone owes you. That's the technicality that they haven't figured out. Sorry. They presume and or assume that the only debt that can be written off is money borrowed. They do not consider the fact that when a person owes a debt and does not pay it within 6 months, that person to whom the debt is owed is considered the lender, not because they loaned the money, but because the debt is owed them and not paid. See, as long as it's not paid, pay attention, y'all. As long as the debt is not paid, every day it's not paid, you're extending credit to the individual. The same as the banks. That's why they charge you interest, because they're loaning you that money because you haven't paid. You don't have to have a credit card account. You don't have to have a debt account. What you have to have is a debt that is owed. And every day that it is not paid, ladies and gentlemen, is considered a loan. If you don't believe me, look at all of those of you who owe money to someone and they charge you interest. Well, how can they charge you interest on something you've never borrowed from them? Because The assessment and the taxes, the same thing the courts. Go ahead and sit up there and write a bad check to the court and see if they will not charge you for that bad check and not charge you fees and then charge you interest per day and then write it off on their taxes. Let's continue. Then they are deemed to be having loaned the funds that have not been paid back. Go and look at what the IRS suggests. If somebody owes you money and does not pay you, you may have a bad debt. And when you look at the surrounding laws, it does not mean that they borrowed money. As indicated before, the banks do not lend money. Cash or money does not exist. See, they don't lend money because cash or money does not exist. All you got to do is type in Google legal tender status and then go to the Treasury website. And they will tell you that Federal Reserve notes have no value. So if someone lends you so-called cash in the form of Federal Reserve notes, which are considered cash, that's something of no value. So then how is it that this is deemed a loan? But in your conversation with these intelligent people, you did not have this conversation with them, nor did you show them the wording of the IRS, and nor did you tell them that nowhere in the code does it say that you have to lend someone cash in order to have a bad debt or in order to receive tax credits. And by the way, once 6 months have passed and it is written off, it can be carried forward because these are not deduction carry forwards. These are tax credit carry forwards. What's the difference? The difference in the deduction carry forward as you simply get an offset of the debt, such as a net operating loss for a business. They get a write-off for their expenses. So with a company, they get a net operating loss. They get to write off their expenses. That's a simple write-off. Now they get a deduction. Okay, they get to reduce their tax liability because they got to write off that debt. However, your write-off comes as a result of someone loaning you money and you forgave the debt. That's a different write-off. That's not a deduction. That is a tax credit. This type of tax credit is not an expense write-off. This is as a result of a bad debt, and thus it is deemed a refundable bad debt under the code. Just ask them to show you otherwise, because you get to receive a tax credit by simply doing a 1099-C. By forgiving the debt, that debt gets to be carried forward. And if it is done in the proper way, the individual may receive a refund. Remember, a tax credit in this format is dollar for dollar, so it is equal to $1, whereas the deduction only allows you to offset whatever the debt you owe, and that's it. It doesn't allow you to carry forward a deduction. You only get to offset your tax liabilities. Pay attention. Okay? Pay attention. However, we have a tax credit, and it doesn't operate that way. It allows you to offset a debt you owe and then carry it forward, the remainder of that offset, according to the IRS, for eternity. If the debt is allowed to be carried forward for eternity and can be sold and part of it refunded, then their general response is because they are not taking all of the factors of a bad debt, carry forward of a bad debt after the writing off of the bad debt into consideration, which becomes a tax credit automatically after 6 months, after the debt is outstanding, and a forgiveness and or cancellation of the debt has taken place. The IRS makes clear that if you forgive a debt that is more than $600, and remember, this is forgiving I believe it is the cancellation of debt and not forgiving a loan. Okay, forgiving the debt and not the forgiving the loan, then you must do a 1099-C. Pay attention. If someone owes you a debt of greater than $600, you have to do a 1099-C. 1099-C is you're canceling the debt or forgiving the debt. The tax credits come as a result of forgiving the debt and canceling the debt. This is not a deduction. or a 1099A if applicable. So where is their understanding that this type of debt cannot be carried forward? Which code did they show you? What reference did they point you to? Section 166 only deals with deductions. However, these are not deductible tax credits. These credits are dollar for dollar. Unlike deductible tax credits, which usually are a percentage, can be carried forward for eternity. Where is the deduction? Whereas a deduction has limitations on whether or not they can be carried forward or carried back. I am not the tax person. I am just a lay person. And if I have this understanding and can point out where the Internal Revenue Service has put this information, therefore everybody to know, in other words, where the Internal Revenue Service has put this information out there for everybody to know, then I bring up the so-called Section 166 of the code. How is it that they can say something to the contrary and not prove it by way of the code? What they are doing is a practice. This is a practice, not to be able to tell someone that they are able to write off the debt. What a person simply needs to do is to write off the debt, to carry forward the debt, and then apply that carry forward in a fashion to where it is a refundable, partially and or otherwise. And there is nothing, and I can just about guarantee nothing in the code that says that you can't do this. This is done every day by corporations who sell tax credits. For if you could receive a refund, how in the world could you possibly sell something that has no value? Because you can sell tax credits. Because you can sell tax credits. This means tax credits have value, and the value is not a so-called deduction. So these are refundable tax credits and non-refundable tax credits. So there are refundable tax credits and non-refundable tax credits. If you can sell a non-refundable tax credit, you can sell a refundable tax credit, which means that under the code, it is possible, when done the right way, to receive a refund. Even if you could not receive a quote-unquote refund, the credits themselves still remain of value of being dollar for dollar, and that, because it is sold to another, can be used to acquire, purchase, or offset and or trade in the sense of valuation and acquisition, as well as settlement, referencing property, debt, and purchases. Again, take this particular email, present it to them, and let them rebut it. That's all I'm asking. I'm not looking for them to tell me I'm right, or looking for them to I'm looking for them to prove to me I'm wrong. Now, if they can do that, then I'll make a public apology to everyone. But if they can't, then they owe you an apology for their narrow thinking and the limited advice on what can and cannot be done with tax credits. This is what I wrote the individual, ladies and gentlemen. Okay? This is the long conversation I typed back to this person. The rest of you, this is your understanding of the tax credit game. We are not going to do this wordplay where somebody tells you can't do something and you just go, okay, I can't do it. I can't do it, y'all. No, I can't. They said I can't put one foot in front of the other, so I can't do it. I told you, I have people telling me all the time, you can't do that. And I look at them like they're stupid. What do you mean I can't do it? I just did it. Didn't you just tell me I just did something? And how is it that you're going to tell me I can't do it? What are you talking about? Well, you just told me that I can't do something. I can't do it. And I just did it. So how is it you can tell me that I can't do something that I just did? What you now need to do is to prove to me that I can't do what I just did. They cannot, ladies and gentlemen, because I deal with technicalities. I deal with the technicality of a code. I don't deal with the wording of a code. No, the wording of a code doesn't mean a thing. It's the intent behind the code. There are a lot of codes who say you can't do this and you can't do that. However, you always have to ask, what is the exception to the rule? Well, the rule is you cannot receive a tax credit for monies you haven't loaned out. Really? But you can receive a tax credit for forgiving money that is owed to you. Really? You can receive a tax credit for forgiving money that is owed to you, but don't the money that is owed to you has to be a loan? No. It says if somebody owes you money. Go back and read it. Hold on. Let me see. I think we can do it this way. Okay. Come on now. Let's see. All right. Let's see. Oh, it won't let me do that. All right. IMS tax topic. Where's my 453? There we are. Ladies and gentlemen, if y'all can't hear the music in the background, let me turn it up. I'm not going to turn it up too loud. You see, that's the thing about using a cell phone. I can control my music volume. I'm not going to turn it up too loud because I don't want to blow y'all. I mean, I could blow your eardrums because I could turn it all the way up. You see how far down it is? All right, let's let you read it, ladies and gentlemen. Okay, because they even talk about when a debt becomes worthless. If someone owes you money and you can't collect, you may have a bad debt. Wait, hold on. If somebody owes you money, it does not say you had to loan the money out, does it? Now, down here it says generally to deduct a bad debt. Now, generally, that's not limitations. That's just generally. You must have previously included the amount in your income and loaned out your cash. That's generally. Well, when is it not generally? When somebody owes you a debt and you forgive it. Like I said, I deal with the technicalities. Why? Because this thing lets you know that you can do a 1099-C, ladies and gentlemen, on a bad debt. So we're not dealing with generalities. We're dealing with specifics. If somebody owes me money and I do a 1099-C and they get the 1099-C-B section, that's the taxes being paid because they're responsible for the taxes. So I've already accounted for the withholdings with the 1099-B. So tell me where I'm being restricted from getting a refund, where I'm being restricted from having the tax credits applied, where I'm being restricted from carrying forward the debt. Ladies and gentlemen, just because this section doesn't go into detail about the 1099-C, the 1099-C goes into detail about this section. Okay? You have to put the two together in order to understand where we're coming from. And I haven't seen a tax agent yet, except for those who handle for the large corporations who understand this. But get somebody to prove me wrong. I dare you. Oh, mama, he daring people. Oh, God. I can see a lot of people playing this video for their tax agent. So, ladies and gentlemen, I'm going to stop here. We're going to bring this to a close. And that's it. Have a good day, y'all. Adios.